Let's bring Abigail Doolittle into this conversation as we do every day at this time. And Abigail, I know you're taking a look at this week's rally and whether it could continue.
Up 2.5% on the week, Romaine, on that lighter than expected CPI and the PPI coming in. So inflation fears fading. Well, that's helped stocks go higher, especially as that dollar has dropped. Let's bring in Dr. John Sinclair, the Chief Strategic Officer over at Positive Trends Research. Great to have you with us, John. And, you know, this rally right now on the year, unanticipated at the beginning of the year, but really pretty knockout at this point. The S&P 500 up 17%. So to Romaine's question, do you think it can continue? Because we have earnings, and it's interesting to see these banks flip on the day. We, of course, will have the FOMC. We have an expiration at the end of the month near FOMC. We have this rebalancing, so much.
It's great to see you, Abigail. It's been a pretty amazing run up here. We've been talking about it as a retrace, right? We've been looking at some Fibonacci levels, and once we got past the 50% retrace, we started to really look at the 618, and now we're kind of between the 618, 786, and we're curious. We're wondering how much more the bulls can charge here, you know, if they may take a little bit of a break here in a little bit. So, but there's a lot going on.
So you're speaking code to even me, but if I were to put that into words, or at least into a chart, we have a great chart showing the reversal of last year's downtrend. And the thing that's been so surprising to me as somebody who's looked at, you know, at this point, thousands and thousands of charts, is the fact that we have not seen the kind of consolidation of this year's rally as we did on the other waves of this uptrend. Do you expect that that is going to happen at some point, and probably amid all these different potential trigger events?
I mean, there is a lot happening right at the end of this month. Like you said, we've got option expiration coming up right along with the FOMC meeting. So when that option expiration happens, we get all that fresh gamma in the options market. That new set of volatility that we could see from the FOMC could really push things one way or the other. And like you're showing, as that RSI is kind of getting close to that overbought level. It doesn't mean it can't stay overbought for a while, and we're really not that far from all-time highs. So it could trigger another fast up move, very possible there, but we want to be a little bit cautious.
Yeah, I don't disagree with you on that, especially when you take a look at the big tech charts looking pretty overdone. And, you know, fundamentally, John, you know, are options saying anything about inflation? Because it's so interesting to me that markets just seem to think that it's going to be one and done. But if you listen to the Fed prior to this CPI print, they've said pretty clearly it's never going to be one data point. Plus, if you look at PCE, their preferred measure, it's still at 4.8%. Plus, if you think about the 70s, they don't want to repeat that where inflation can surge higher. So, you know, maybe, I guess what I'm saying is the Fed will stay a little bit more hawkish than markets expect. Are you seeing any messaging of that within options?
I mean, I'd like to say I do, but I mean, things have just been extremely bullish recently. We've seen a lot of gapping up in the market. And just a couple days ago, I think it was July 3rd, I think the put-call ratio ended up being like one of the lowest points that we've seen in a while. So that means that there's a lot of call buyers out there, too, that are really riding this wave up, which has been pretty impressive. So, and, you know, you take a look at the VIX, it had a little bit of a spike here the other day on a quick downturn. So the market, you know, is a little bit nervous at these levels, but it doesn't mean it can't sustain here. And the VIX could stay suppressed here for a little bit as well. So so the bulls have a chance.
Okay, so my words, not your words. That's a no to the markets thinking that they're not going to be, that they will be more hawkish. And also the idea, sounds like FOMO. Dr. John Sinclair of Positive Trends Research, thanks so much for joining us today on Options Insight. And from New York, this is Bloomberg.